Hey guys, so in this video, I'm going over 6 top ETFs to invest in for 2022. If you don't know, ETFs are short for Exchange Traded Fund, which is basically one stock you invest in that has a basket of other stocks inside of it. When it comes to investing, I'm a huge believer in picking ETFs to build long-term wealth, as they are considered to be lower risk investments that offer portfolio diversification. There are tons of ETFs that track all kinds of sectors, but this list includes ones I think have high growth potential while still being safe. Let's get started. So number 6 on our list is the Vanguard Growth Index Fund ETF, VUG. The Vanguard Growth Index Fund ETF is an exchange traded fund that tracks the performance of the CRSP Center for Research and Security Prices US Large Cap Growth Index. Whew, that was a lot of words. VUG specifically monitors 265 stocks with a median market cap of about $330.4 billion. So as suggested by the phrase large cap, these are some of the largest companies in the world. Think Apple, Microsoft, Alphabet, Amazon, Tesla, Nvidia, Meta, and more. So right now, one share of VUG is trading at $281.16 with a 52-week low of $247.82 and a 52-week high of $328.52. The fund has net assets of $165.53 billion, an average PE ratio of 5.76, dividend yield of 0.57%, and a super low expense ratio of 0.04%. Taking a look at the 1-year price chart, you can see that 1 year ago, VUG was priced at just over $250 a share. It pretty consistently grew to about $310 a share, saw a small correction, hit highs of over $320, and in the recent months, we have seen a pretty big price correction, followed by a small jump very recently. It's categorized as a large growth fund, and yeah, unfortunately, we've seen year-to-date daily total returns of negative 16.28%, which is reminiscent of many high growth ETFs and stocks these days. Some of the biggest sectors are in consumer cyclical, financial services, healthcare, communication, and technology, of course. We got an average price to earnings ratio of 38.34, average price to book ratio of 10.19, and average price to sales ratio of 5.72. I already mentioned the top 10 holdings, but you can see Apple, Microsoft, and Amazon are at the very top. Now, like I said, a lot of high growth stocks as well as ETFs have not done well year to date. They performed spectacularly in 2021, but in 2022, we've seen some really big corrections. However, the 1-year daily total return is sitting at 10.31%, which is fantastic. And we have a 3-year daily total return of 21.64%. If we take a look at the annual total return history, you can see that most years VUG was up, but we did see a very big correction back in 2008, as well as a small correction in 2018. In terms of the risk statistics, we have an alpha of 5.14 and a beta of 1.04. So to start off, VUG has a really high upside potential due to it being a growth ETF with holdings from the largest companies like Apple and Amazon. These big companies are relatively stable, which should minimize your risk as an investor, especially if you want low cost for a long-term investment. And I think that a lot of these big companies could be undervalued right now with the recent drops, meaning that now is a better time to get in than 1 or 2 months ago. With one of the lowest expense ratios on the list at 0.04% and an average annual return of 11%, you'd end up with over $200,000 if you were to invest $100 per month for 30 years. This is definitely one of the more popular high growth ETFs that a lot of investors love. Number 5 on our list is the Invesco QQQ Trust, stock ticker QQQ. This is an ETF that tracks stocks in the NASDAQ 100 index. The ETF specifically focuses on companies that are leaders in the long-term transformative trends such as augmented reality, cloud computing, streaming services, electric vehicles, and more. Right now, one share of Invesco QQQ is trading at $351.49 with a 52-week low of $307.39 and a 52-week high of $408.71. They have net assets of $215.24 billion, average yield of 0.46%, and an expense ratio of 0.2%. Taking a look at the 1-year price chart, we can see that 1 year ago, we were sitting at about $310 a share. It grew really rapidly in 2021, all the way up to highs of over $400. And since the start of 2020, we have seen a very big correction with, of course, another small jump very recently. It's categorized as a large growth ETF with, unfortunately, a year-to-date daily total return of negative 18.6%. Some of the biggest sectors are going to be in consumer cyclical, consumer defensive, healthcare, communication services, and technology being the largest at 45.71%. We have an average price to earnings ratio of 33.89, average price to book ratio of 8.93, and an average price to sales ratio of 4.61. Like I said already, we have a negative year-to-date daily total return, but if we take a look at the 1-year daily total return, we can see that that is actually 8.41%, and the 3-year daily total return is a very high 24.47%. The annual total return history shows a lot of green bars, with growth as high as 54.45% in 2009. But of course, in 2008, we saw that huge negative 41.68% return. As far as the risk statistics, we have an alpha of 7.8 and a beta of 1.02. So since 1999, QQQ has demonstrated a history of outstanding performance, consistently beating the S&P 500 index. I think that because of their big exposure to big technology companies that are leading the race in transformative long-term themes, we should continue to see a lot of growth over the next decade. QQQ also has a pretty low expense ratio of 0.2%. It's not as low as some of the other ones, but in the grand scheme of things, it's not too bad. And like I mentioned earlier, their daily total return for the last 3 years is about 24%, which is very, very strong. And they even have a dividend yield of about 0.57%. Overall, this ETF stands to gain in the long term due to the largest companies being in the best position to survive times of financial struggle like the last market downturn that was caused by the pandemic. So yeah, overall, a really great ETF that is very popular amongst investors and one that you should have on your watch list. So picking ETFs based on your investment goals is tough, but Wealthfront makes it easy, and that's why I encourage everyone watching this video to invest through them just like I do. Wealthfront just added a number of ETFs to give you guys exposure to new categories like the metaverse. You can choose from a total of 245 different investments across different sectors to build a portfolio that reflects what you believe in. What I love about Wealthfront is they help you minimize your risk by automatically investing and diversifying, while also finding new high-quality funds that are hand-selected and vetted by their team of experts. You can find and research these new ETFs on their Explore page, as well as hundreds of others right on their website or through their app. You're able to customize your risk tolerance, see the recommended portfolios, or create a new one from scratch. So if you want to get started with investing in ETFs like the ones mentioned in this video, go check out the link below to get your first $5,000 managed for free on Wealthfront. And now back to the video. Okay, so next up is the iShares Global Tech ETF, stock ticker IXN. IXN is an ETF that tracks 132 global stocks in the technology sector, including Apple, Nvidia, Cisco, Samsung, and more. Right now, one share of IXN is trading at $56.80 with a 52-week low of $49.44 and a 52-week high of $65.52. They're on the smaller side with net assets of $5.93 billion, an average dividend yield of 0.62%, and expense ratio of 0.43%. Looking at the 1-year price chart, we can see that 2021 was a very, very good year for IXN, but just like the others, it has dropped significantly in 2022. Looking at these sector weightings, we can see that the largest sectors are in financial services at 8.41%. And of course, it's literally a technology ETF. So technology sits at 89.72%. We have an average price to earnings ratio of 33.31, average price to book ratio of 7.94, and average price to sales ratio of 5.19. Here are the largest 10 holdings in this fund, representing 56.06% of total assets. Now, year to date, we have a negative 18.72% daily total return. But if you zoom out to the 1-year daily total return, that's sitting at 8.11%, and the 3-year daily total return is at 25.91%. And looking at the annual total return history, we can see that, of course, we have a lot of green bars, but we did have red years back in 2018, 2011, and 2008. The most recent years, you guys, the growth has been absolutely crazy, but 2022 might be the first year where we do see some red. IXN has an alpha of 12.53 and a beta of 1.05. Okay, so from the top 6 ETFs in this video, IXN has the highest expense ratio of 0.43%, but it's also had significant growth over the past decade. With a total return of about 25% over the last 3 years, this global tech ETF is likely to continue its momentum over the next decade or longer. Overall, I think it's a great fund for anyone who wants to not just be limited to US stocks. And yeah, it's cool because this one has exposure to giant tech companies such as Taiwan's semiconductor manufacturing company, as well as South Korea's Samsung. So your portfolio is ensured to be a little bit more diversified across major tech stocks all around the world. So yeah, if diversifying across the world in tech stocks is your cup of tea, then this one is definitely one to keep an eye on. It's also available through Wealthfront as one of their newest ETF additions. Okay, so next up is the Schwab US Large Cap Growth ETF, stock ticker SCHG. This is an ETF that tracks the stocks of the Dow Jones US Large Cap Growth Total Stock Market Index. It includes 235 different stocks from companies that are expected to experience higher than average growth like Apple, Microsoft, Amazon, and Meta. Right now, one share of SCHG is trading at $72.68 with a 52-week low of $62.72 and a 52-week high of $84.11. We have net assets of $17.81 billion and an average yield of 0.43%. The expense ratio for this fund is at 0.04%. Now, if we take a look at the one-year price chart, we can see that the price of SCHG really rose in 2021 just like the other funds, and we have seen that same crash as of recent. Some of the largest sectors in this fund are going to be consumer cyclical, financial services, healthcare, communication services, and of course technology at 39.21%. So you do see a common theme with all these high growth ETFs. They have a lot of technology. We have an average price to earnings ratio of 36.82, average price to book ratio of 9.81, and average price to sales ratio of 4.82. Here are the top 10 holdings. You can see that they account for about 52.1% of total assets. And yeah, the year-to-date return right now is negative 19.09%, which is obviously far from optimal, but the one-year return is 8.41%, and the three-year daily total return is 21.03%. Here's the annual total return percentage history, and you can see that in the last few years, this fund has done extremely well at between 28 to 39% gains. It has an alpha of 5.48 and a beta of 1.02. So SCHG is an ETF that has a lot of growth potential due to the fact that it tracks growth stocks. So it has the opportunity to experience higher returns at a greater risk than your average ETF. Even with the greater risk associated with tracking growth stocks, SCHG has been up a significant amount in the past year and even more in the last 3 years. The ETF also has a low expense ratio of 0.04%, meaning you'd only pay $4 in annual expenses for every $10,000 invested into this fund. If you ask me, it's well worth it for being able to invest in so many different companies all at the same time. So yeah, overall, if you are big on the large cap companies in the US and believe in them for the long term, then definitely check out this ETF. Okay, number 2 on our list is the iShares Select Dividend ETF, stock ticker DVY. DVY is an ETF that tracks the investment results of stocks that pay relatively high dividends. It's a really great ETF that offers access to 100 US stocks with 5-year records of paying dividends like Pfizer, Altria, ExxonMobil, Philip Morris, AT&T, and more. So right now, one share of DVY is trading at $126.35 with a 52-week low of $110.24 and a 52-week high of $128.04. So you can see that this is the only fund on this list that is relatively close to the last year's high price. We have net assets of $19.86 billion, a dividend yield of 3.23%, and an expense ratio of 0.39%. If we take a look at the one-year price chart, we can see that this fund did not grow like the other ones. Being that it's more of a dividend ETF, you can see that the price sort of hovered between $112 to $120 for most of the last year, but pretty recently we have seen the price jump up quite a bit. It's in the large value category with a year-to-date daily total return of 0.31%. And if you take a look at the sector weightings, we can see that the largest sectors are going to be in consumer cyclical, financial services, consumer defensive, and utilities being the highest at 26.86%, and then finally energy at 8.15%. We have an average price earnings ratio of 16.93, and average price to book ratio of 2.06. Here are the top 10 holdings, making up about 19.14% of total assets. You can obviously see these are very, very different than the other ones we've talked about. And yeah, looking at the performance, we can see that the year-to-date performance is at a positive 0.31% return. The one-year daily total return is 12.73%, and the three-year daily total return is 12.24%. Not as much high growth in this ETF as some of the other ones, but of course you do have that very high dividend payout. Its alpha is negative 7.52, and the beta is 0.99. So like I said, this ETF tracks stocks that consistently pay out high dividends, which is a solid investment for those that believe in beating the market through dividends. This one doesn't invest in high growth companies, but it can be high growth if you continually reinvest the dividends back into this fund. Although it has an average expense ratio of just under 0.4%, the very high 12-month dividend yield is what most investors pay attention to with DVY. It's the only fund that actually grew year to date, but you can see that in the long term, the growth of this fund has not been as high as some of the other ones. But of course, that is offset by those very high dividend payments. Again, not a traditional high growth ETF, but one that is definitely enticing to a lot of investors. Okay, so finally, number one on our list is the Vanguard S&P 500 ETF, stock ticker VOO. VOO basically invests in the largest 500 US companies, offering high potential for investment growth long term. Specifically right now, they hold 507 different stocks, including Apple and Google. And VOO is actually the number one holding I have in my personal portfolio. Right now, one share of VOO is trading at $409.89 with a 52-week low of $354.14 and a 52-week high of $441.26. This is a very big fund. They have net assets of $753.41 billion. We have dividend yield of 1.34% and a very low expense ratio of 0.03%. The price chart of this fund for the last year is very reminiscent of many of the other ones we've seen, with very, very high growth back in 2021. Followed by a correction this year. It falls in the large blend category, has a year-to-date daily total return of negative 8.94%, and the largest sectors are going to be in consumer cyclical, financial services, healthcare, communication services, industrials, and technology being the highest at 24.24%. We have an average price to earnings ratio of 26.46 and an average price to book ratio of 4.42. Here are the top 10 holdings, and you can see that this makes up about 27.43% of total assets. So of course, negative return year to date, but we have a 1-year daily total return of 16.44% and a 3-year daily total return of 17.69%. VO has also done extremely well over the long term, with just one red year back in 2018 at negative 4.42% returns. But yeah, last 3 years, VO has done extremely well. We have an alpha of negative 0.03 and a beta of 1. So because VO has shares in the top 500 largest companies in the US, investors can expect a lot of safety from market volatility, as there are a lot of blue chip companies in this ETF. Diversification can be a great asset in times of a bear market in specific sectors, and their holdings make me very confident in my money. Now, right now, this ETF has a ridiculously low expense ratio of just 0.03%, meaning you only have to pay 30 cents of investment fees for every $1,000 invested. It's really common knowledge at this point to be investing into the S&P 500, and I think VOO is one of the best S&P 500 ETFs out there because of their super low expense ratio, at least compared to many other ones like SPY and SPDR. Overall, I think it's an impressive ETF that everyone talks about, but I want to emphasize that if you believe in long-term investing, ETFs like VOO are probably one of the most secure choices you can make, along with the other ones on this list. So there you have it. Those are my top 6 ETFs for the year 2022. If you guys want to get some free stocks or some free crypto, make sure to use the links below. And of course, get your first $5,000 managed for free when you sign up for Wealthfront using my link. With all investing, I want you guys to do your own due diligence. Just because a stock or ETF was on this list does not mean that you should just go out there and buy it. Do your own research, make sure it works with your own investing goals. And yeah, don't take this as financial advice because I am not a financial advisor. Picking and choosing individual companies is very hard. You will win some and you will lose others. ETFs are a great investment choice because they make investing safer, so that's why I really like them. For the really low expense ratios, it really is worth it. Anyways, I hope you guys enjoyed the video, and if you did, make sure to hit that like button and also subscribe for more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. My whole goal is to make you guys millionaires before the age of 30. Thank you so much for your time, and I'll see you in the next video. Peace.